Joining us today is Demetri Themelis. He is the co-founder and CEO at Knock, a performance management platform and CRM for multifamily property owners and managers. Now, in his 8 years at Knock, Demetri has led the company to win 3 startup competitions and successfully raised $50 million in funding. Now, prior to co-founding Knock, he worked in equity sales at UBS. He is also an avid skier and has participated in the U.S. Free Skiing Open, slope style, big air, and half pipe competitions. Demetri, welcome in.
Oh man, it's great to be here. Thank you very much for having me. And yeah, the bit about the skiing, it's true, but it's been a while, so maybe I should update my bio to something maybe more recent, although maybe less impressive.
I don't know. I mean, going down the slopes for me, not as easy. So, what does competition mean to you? Does that help you when you're designing? You're talking about raising capital and all these things. How does that play out and how you shape up the brand you build?
I love competition. Like I just think there's something fun about it. But you're an athlete, you get it. I don't know. You either like competing or you don't. I don't know. I'm in the camp of people that likes competing. I love having competitors. I like
Yeah.
having an enemy. It's motivating.
Yeah, and in the green room, we were kind of huddling around like how multifamily competes. Like everyone really has this location, the real estate, the 4 walls, and all those things. And I think there's some. It's fun to watch how people are creating value and differentiating, because ultimately that's what a company does, right? It's like, how are we different, and how do we make our customers feel that they're special and they're getting the greatest value? What are your thoughts around that? I mean, I know technology is part of what you're doing for those companies.
Yeah, I mean, as we were kind of saying in our intro call earlier, um, multifamily, it's fascinating to me that product can be, you know, people would disagree with me, but pretty similar, right? It's like 4 walls and a roof. It's housing. You can have, the relatively same location, and yet, like the organizations, the strategies, the how people make decisions, the technologies they use, almost everything that goes about bringing that product to market and how it's operated, can be dramatically different from one management company to another, one operator to another. And yeah, it is really fun every time we bring on a new customer. I take a lot of joy in kind of learning about like what's their secret sauce, like how do they view themselves as a competitive force in the market. And it's just remarkable how ultimately how similar the end product can be, and yet how different the pathways to offering that product to the end customer, the renter, can be.
Right, right. Even in how deals are put together and funded, and
Yeah,
when they meet
at
their
every layer, like there's just there's options.
right. I always pick on the automotive industry because, I mean, I'm in a building now. You're probably in a building, and of course, the products that all of our customers produce are buildings, apartment buildings, and uh, you look at the evolution of the vehicle, the automotive vehicle, over the last 30 years, and it's phenomenal, right? They're driving themselves. I mean, I think there was a video I was watching about Elon Musk around like it kind of learns like, oh, you're home, and well, you get in the car early in the morning, and it knows like the temperature you want and what time you go to work. But it's been a car, 4 wheels, and a shell, and it's moved you from place to place for a lot of times. And I look at a lot of the dominant players in that, from Toyota to Honda to just legendary brands like Ford, and many of them didn't just innovate because they thought they needed to. I think like Tesla came along and really got them to think differently and challenged the status quo. And the customers, you look at the collision of Amazon and what way people want to buy things. A lot has collided with a lot of success. I mean, because you can't
Hmm.
argue like Ford, they sell a lot of cars.
Hmm.
How do you get a company like that who's winning already to change, right? And so I think
Yeah.
about multifamily, and look, we've historically said that in many cases, maybe people have been reluctant to change or slow to change, but hey, there's a lot of success there. I mean, they're getting
Hmm.
their returns. People are,
Right.
it's like it's easy for you to say that, but it's at the same time, we also need to think like we have to protect the customer too, so they don't end up chasing a brand like Tesla someday, right?
Sure.
So tell me
Yeah.
what you think about are the conversations you're having in these boardrooms and with maybe clients and prospects around the taking on and evaluating even decisions about technology.
Yeah. Well, first, I just want to say I drive a 1999 Toyota 4Runner, so my car doesn't do any of those things. Maybe someday I'll catch up. So I don't know. Maybe you're talking to the wrong guy about innovation here. But yeah, I have a lot of opinions on that subject. Obviously, our company is like view ourselves as an innovator in in property technology, and have a desire and an interest in helping customers to become more efficient and leverage technology to drive more efficiencies for their businesses, and better customer experiences for sort of really all the stakeholders involved, renters, renters, of course, as well as leasing agents, property managers, regional managers, and so on and so forth. I think that when you talk about why this industry has been so reluctant to change or hesitant to change, and then kind of pair that with, like, I do think that performance, like those output kind of metrics that you talk about, like rent growth all-time high, or rents at nominal level all-time highs, occupancies really high, and therefore the prices of properties and like current cap rate, prices all-time highs, cap rates like pressing all-time lows. So certainly there's an argument to make that despite the lack of innovation, like the performance is that kind of speaks for itself. But I ultimately think like there's look how many articles we see every single day of like acquisitions of management contracts or portfolio takeovers. There's companies that are growing, there's companies that are shrinking. That may be by design or just natural life cycles of the businesses. But like there's there are newer brands out there in multifamily that have taken huge market share of, just say, like management contracts, or owners that are deploying capital really efficiently and getting really good returns. And so even behind kind of like the all boats have risen with the tide, like I think there's outperformance, and those that are outperforming like definitely have an innovator's mindset. But I will say that sorry for the kind of the run on here, but I will say that the thing that strikes me is like the most interesting, and I love talking about this, is that multifamily operators, so often encountered with multifamily operators who just don't think like performance management organizations. Like they've got this like I don't know, they suffer from this like identity issue where they're like, well, I'm a property management company, and my team is we're landlords and property managers, and my customers are renters, and they don't think like I'm a sales team, and I have a product, and I have a customer, and they don't use the same vocab as like a SaaS, software as a service business, or like venture funded technology companies. Like they don't use any of the same vocab when they're thinking about performance or their organizational models. And so that stuff just fascinates me, and that's probably one of the things like I hope we can continue to be a thought leader in, is like helping our customers shake off this notion of like, I'm a property manager. It's like, no, PMC isn't property management company. It's like performance management company. And we're going to like think and act and behave like a performance management company, like all that means.
Yeah. Does your background at UBS give you some edge on that? Does that shape up a lot of your experience going in? Because ultimately, just even in wealth management and the things that the customers that you serve manage, does that help you think through things differently?
Maybe, I worked for a big bank, UBS, and doing equity sales trading. And, my job was like essentially working with our analysts and recommending individual stocks, people buying and selling stocks for somebody's, portfolio. So it's very performance it's a very performance driven business, and it's very data driven business. So definitely, I hadn't really thought about it. Like, I guess maybe that's a kind of a little bit of a shaping factor, but I just think it's business in general. And like, I'm always struck by, like, if you and I were to drive down the street and I said, "Hey, Patrick, point out the next 10 businesses," you might go, "Oh, there's an O'Reilly's, and like there's a, an AMC movie theater, and like there's a McDonald's, and there's a Best Buy, and there's a, Nordstrom's, and there's a great Mexican restaurant I like." Those business, 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 business. But in the meantime, we would have passed like 10 apartment complexes, and you wouldn't call those out as businesses. And so, like, I just think there's this like weird identity issue where, like, even like, yeah, globally, people don't think of every single apartment building as a business. So like, that's a whole other topic, like how we're marketing ourselves as an industry, for talent, attracting talent and leadership and ideas, et cetera. But even I think that permeates the industry itself, where, like, again, we don't, like, a lot of our customers, like, they have a hard time thinking of themselves as a performance business. And so, they don't make decisions like a performance management company, technology procurement decisions like a performance driven company. And I think, again, I think it's like that identity issue is kind of like the original sin for our lack of innovation in multifamily that certainly everybody talks about all the time.
Yeah, that's interesting. I mean, you look at rent. I mean, real properties and apartments have been sort of subscription-based customers forever, right?
Sure. Yeah.
We didn't even realize it, but we do make them pay all in the same time of the month, which is like, well, maybe, I don't know, maybe we should think about things differently.
Yeah.
It's pretty interesting. I love the way you think about things, because ultimately you kind of back up the lens. And you mentioned procurement on just evaluating technology. I mean, I think that the executive of the future, so, and I've said this even at our innovation summit, and is, the way that we get a job, we learn something, we teach others how we learned it, and then we expect them to do what we've done because we're familiar and comfortable with that. And we've gotten a lot of success, so rightfully so, right? But I think the future of executive portfolio management, even leaders of these organizations, they're building technology companies, and they need to be able to bring those technologies in, but not just identifying, but build the teams to support them, get them to roll out effectively, get them to actually get used, and then give you the feedback loop, I'm sure, to keep building, because it's never done, I imagine, right? Your product's evolving.
Of course.
So, yeah, I'm just wondering, like, if you're sitting on the real estate side, and you're maybe a little biased because you do have a technology stack, but also I think we can learn a lot from this collision that's happening from innovators to successful operators in this conversation that they have to have together, is how do we bring and build those leaders, empower them to know, like, when to do something, how to evaluate it, right? What are those questions that they should be asking, right? So they make good decisions.
Yeah, it's a great question. I feel like, sometimes there's like maybe too much of a divide. And again, like, I'm a supplier, like, run a technology company. So, I haven't worked for a multifamily operator myself, but I've been in a lot of budget conversations, and I've gotten to see and learn a lot of operating models. And certainly there are those that do this better than others. But if I could make a generalization, I'd say there seems to be a bit of a split within organizations, where you've got, like, sort of like the asset manager, like the analyst, the accountant, the math and modeling sort of group, and then the money, right? And then you've got the operators kind of doing the work. Whether that's like marketing or leasing, maintenance, operations, et cetera. And, I'm not so sure that, like, that might make sense from like a strengths, or just, simplicity from an organizational development standpoint. But, like, there just always seems to be this disconnect between, the operators, people that are kind of doing the work, and, they want to innovate and make changes, but they're not like the ones that are sort of responsible on a day-to-day basis for like the performance reporting of the business. And so to kind of get to my point, I find that a lot of people, in operate, it's like a call it like a VP of marketing or VP of operations. They look at a new piece of technology and they aren't really armed. Often, they'll look at like features and benefits, but they aren't really armed with how to articulate that, make a case for the value, how to evaluate that, the time it's going to take to evaluate that, what metrics they're going to pay attention to. If there's just kind of missing that, again, that kind of performance management DNA, because it's just not something that's taught or, encouraged a lot within multifamily, unfortunately. And so again, there's folks that do that, exceptionally well. And I think we work with some of the best and brightest in that regard. But I think it would certainly make our job a lot easier bringing, new technology to bear. If we could have, more of those conversations with, more people in multifamily on a more regular basis.
Yeah. And I know the post-pandemic, the acceleration of that, the necessity of having those conversations accelerated. And I do see a lot of good movement out there, but there's a lot of work to be done in what you're talking about. And it probably comes back to even the lenders and the LPs, the people that are giving the money to protect their capital. The more education, the more conversations we're having like this, then they can look at that as sort of part of the due diligence of how to identify a sponsor. Do they have the ability to identify and bring in great technology and think about the customer, allow that customer to use the product in an efficient way, which protects my risk? And so I am seeing some more trends around that, which is exciting, but there is a long way to go because we've come out of that hole where it's like residents weren't paying rent in many circumstances. There was the efficiency, the cost
Wait,
to
so
build.
are you saying that lenders are looking at like the technology stack or the technology decisions, implementation, adoption of a property management company, let's just say, or an owner, an owner or developer,
Yes.
and almost using that as like, a lending criteria, whether or not they should make a loan or, could it impact rates or their risk premiums, et cetera?
So I don't know that the lenders are that there. I mean, they have their models and their ratios and their benchmarks and stuff like that. In terms of the risk, I think the coverage ratios and all that cover them on the risk side of things. But I think the funds and the people that are giving money to the equity sides of the deals are more careful, like for even the ESG strategies, right? Like where the money's coming from, they're understanding like the customers are changing. And if you have a sponsor that, has a portfolio and does X and the technology's, way back when there maybe zero technology, and you have another portfolio and they're buying deals and they go into it getting lift because they're implementing technology, operating more efficiently, renting 24 hours of the day. Like to me as an equity, I'm like, okay, that sponsor looks strong, and I am hearing those conversations, which means and I want to get to your point because I know you're doing some big things for people to help on the affordability thing. I want to get to that today, but equity partners and deal makers are looking at like, how are they going to get to the yield? What's the likelihood of this happening? And if it's like only on rent increase, then they need to look at other ways to get there. And I think technology becomes the easy spot to look at.
Yeah, 100%. Like, I think, there's a couple of really cool themes right now, kind of driving the efficiency conversation. Number one is use of automation. So AI in the leasing process. So I think there's a whole conversation around that. Number two, like enabling multiple tour types. It's like you said, leasing 24/7. It's not just responding to, using AI to respond to people, but, being able to get folks into those units, evaluate those units, help accelerate decision-making, leveraging multiple tour types like unassisted, virtual, or unassisted in-person appointments. There's all kinds of cool things going on there that we're really involved with and partnering with some really great companies doing. And then the third is gets a lot of attention. It's just, everything with centralized leasing and companies, evaluating their operating models and going, gee, like, staffing is really expensive, and it's, the number one cost of operating my properties, and talented people are harder and harder to find and more expensive when we find good ones, and harder to retain. Can we leverage specialization and, drive better unit economics with our, staffing, by centralizing, leasing functions, let's just say, or resident, engagement functions. And we're super proud to support, our technology fully supports, those kind of operating models. And so I think it's definitely like the future. It's more efficient, and it's exciting to see more and more companies start to take those steps to drive efficiencies. And to get back to your point, it's like, if I'm more efficient, like, I can eke out a few extra bucks. I've got, better NOI, better yield on my property. And then, like, I'm able to deploy capital more effectively. Maybe I can pony up a few extra bucks for the next property, and my pro forma and how I'm looking, my model is just fundamentally different than my competitor. I can deploy more capital, can acquire more units. I don't always know how the macro environment's going to look, but, like, oh my gosh, like, we have customers that, like, tell us after a year of working together, they're like, we were able to grow way beyond our planned growth rate this year because we were able to deploy technology, and it just drove efficiency. So, like, I see it anecdotally every single day.
Yeah, and then when they do the math, it matters in a world of rising costs and rents that can only go so high. That matters, I think, to business operators. And you mentioned a lot about efficiency, and I like that because you're not only creating efficiency, but you're giving the people that are working better tools to enjoy the job better, right? And flexibility even in the way that they work. So a lot of really great things there. Let's talk a little bit more about that workforce. Has the global sort of shift in the way all companies are working remotely and the customer expectation of when people need to be where and where they need to work and all that, has that impacted the growth in what you're working on?
Oh yeah, definitely. I mean, we've essentially at Knock, we've shifted to not almost every single role, maybe with the exception of the office manager, is a remote optional role, and the kind of global staffing, all those global staffing issues, they affect us like everybody else. Certainly become, more expensive to hire and find and retain great talent. But, it's also, I think, like, I kind of look at those challenges like opportunities. Like, this is like, we've been given this great opportunity now to think about our business and how we can do things differently. And, innovate, it gives us an opportunity to innovate and outcompete. And so, we have a lot of fun things going on to try to, combat those challenges or really, do cool things to kind of overcome those challenges.
Yeah. When you're talking with companies and because I know you have brands that are all in and they understand, they're forward thinking, they know where things are going, and they're relying on you to do those things. But how do we create fail-safe environments for these companies to just try things out or get a taste of the technology, how it could impact, so they can get some sort of results for themselves? Like, do you guys think through that at your organization, and how does that look for companies?
I mean, there's no, fail safe, I guess. I don't know, maybe like there's always a non-zero chance that something doesn't work out. I think the important part is just, and it kind of goes back to what I was saying earlier, is a lot of multifamily companies like aren't equipped. They don't know how to measure, they're not like have the mechanism in place to really measure. And so, like, I'll just kind of paint like an example, like two examples, like two management companies looking at implementing a new technology. They go to a conference, they see something like Knock, they go, okay, there's some really cool shiny bells and whistles, or I'd love to be able to offer, bring this technology, into my organization to kind of help streamline my customer experience outcomes, et cetera. One company uh, just starts plugging it in, and do I like it? Like, what's my success criteria? Whereas another company says, okay, like, what are my output metrics that I'm looking to bend? Is it lead to lease conversion? Is it economic occupancy? Is it my marketing expense, cost per lead, or cost per lease? Is it my retention rate? Is it my staffing ratio? Like how many staff I need per units? Whatever, they get very, very focused on the specific operating metric that they want to bend, because they understand that increasing operating leverage, will unlock, growth for their business. Kind of going back to that whole, like, whether it's more capital efficient, can deploy capital more efficiently, whatever. But anyways, they're getting laser focused on like very specific operating metrics that they know bring operating leverage to their business. And then they look at a time period. They say, okay, like, how long is it going to take for me to evaluate that? And they're just very scientific about measure, first choosing an operating metric, then something that's quantifiable, measure, like a good old fashioned SMART goals, and then deploying the program around that, where they can very much quantitatively and qualitatively, determine whether or not something is a good use of their time. And just all too often, in multifamily, like, there isn't that strategic conversation taking place in the procurement process, and different project sponsors within an organization. There might not be any real consensus or clarity on like what operating metrics they're trying to take aim at when they're adopting a new technology. And so instead, what happens, you just kind of chase a feature, chase a the idea of a benefit, some a qualitative benefit, and none of the real work is being done to actually make sure that those programs then become successful. Puts a bad taste in IT's mouth, and the asset manager's mouth, and you kind of do that enough times, and you end up where we've kind of ended up as an industry. So.
Right. And we've talked a lot of big picture and the trends around even the customer shifting and implementing changes and stuff. Can we take a moment here? I do want to get to what you're doing to help on the rising rent prices and things like that. But before we get there, can we talk a little bit about what your product does? We didn't spend any time on that. I'd love to explore that, because you mentioned output metrics. What output metrics are you bending, I guess? And tell us a little bit about how you get there.
Sure. So Knock our core product is a CRM. So for those listeners not acquainted with the acronym, that's customer relationship management. And customer relationship management is a category or a type of software that helps an organization, manage its relationships with its customers throughout the entire life cycle. And so I'd say that's probably the closest thing to like Webster's definition of what a CRM does. Every business and every, regardless of the business, there's you have a company, it's got a product, it's got customers. And so, and you've got to, every business and every industry has to attract those customers. They've got to, close them, like convert them, and then they want to retain those customers and create, long-term valuable relationships with those customers. So that's like a global business problem. So every business has the need for customer relationship management. Now, specifically within multifamily, our product is vacant units. Customers are renters, and every one of our customers has to successfully attract, convert, and retain those customers. And so Knock is really a technology that's used to accelerate outcomes and improve insights along that attract, convert, and retain journey, and help, it's just those two things, like accelerating outcomes and improving insights into that customer journey and how to make it more efficient. And so the benefits of a really well implemented and designed customer relationship management system is going to be, in the attract phase, like more efficient marketing, lower cost per lease. In the convert phase, that's going to be, a higher conversions rates, like your lead to lease or appointment to lease percentages. Also, because you can leverage technology, for centralizing leasing efforts, the cost to staff those same results can take aim at that as well. On the retention side, operating metrics like renewal rates and rent increases. And so, I hope that answers your question. Like, that's kind of what a CRM is. Like, that's what Knock does for our customers. And those are the operating metrics that we're really, laser focused on. Because everybody, you could walk the NAA trade show floor and everybody's got a sign that says like, improve your NOI with blank. But like, okay, how do you improve your NOI? Like, well, from our perspective, like, that's how CRM, works and impacts our customers' business.
Yeah, I mean, you think about the time value of money. You can start doing, the asset managers, and you'll start doing the math on that, on the impact of the bottom line on that. What's next for you guys? Anything exciting coming along?
Oh yeah, we've got a lot of fun things brewing. I think 2022 is going to be our probably our most exciting year of product development ever. We have a bigger team than ever. Super talented, talent everywhere, but like, especially in product and engineering, we've got a ton of new, fun new roadmap items. I'd say for now they fit into a lot of those themes that we've been talking about, like automation, centralization, enabling flexibility in, how our customers are going to market. So maybe we don't want to talk about all those things yet. Otherwise, take our own steam, coming conferences and stuff. But yeah, just really excited. I think like that customer journey, like how our customers attract, convert, and retain. You think about all the steps on that customer journey, whether how customers search for apartments, evaluate, decide, apply, move in, like engage during their time within the property, and ultimately reevaluate, start a new search or start a renewal process. Like, that journey has got so many little pieces to it, and there's so many different areas that can be improved upon and streamlined, and leveraging, other technologies in a CRM to make, again, accelerating outcomes and improving insights. Like, there's just, it's quite a fun, there's just so much opportunity, both like to improve what's already been done, but also greenfield opportunity as well.
Yeah, and maybe this question's more for your engineering team, but really,
Sure.
I'd love to learn, and maybe that's on another episode, but around the feedback loop around how the product's evolving, how you're spending time with the customers. Are they giving feedback to the innovations that you're creating? And is that more like, I always say, like, if somebody supports if they're involved, not, I always say, I heard somebody say this and I thought it was interesting, so I wrote it down. I don't remember where, but
Yeah.
when they're involved with it, they support it more, right? Do you involve your customers in the feedback loop and in the product design stuff?
Oh my gosh, yeah. I mean, we wouldn't, they are our best product managers, our customers, right? Like, they know best always. And so, yeah, we have, we have, some formal structures, like a customer advisory board. It's really, really, talented and perceptive individuals who are really good at articulating not only pain, but also helping build solutions. I find a lot of customers in general, and this is true for a lot of technology companies, customers are really good at identifying pain. Like, they can say, this is where it hurts, but they're not always the best at architecting like what the right or the best, most scalable solution would be. So, we've tried to, we've built a customer advisory board, with some amazing individuals who are really good at both. So we've got some formal structures in place, but like, informally, like, just stay connected to your customers. And if we lived in a world where our customers like weren't telling us that there was, what we needed to do next, that would probably be the scariest possible thing for me as running a technology company.
Right.
And I'd probably be running for the door. But as it is, our customers have, a lot to say, which is great. It means they care. And, that's, endlessly meaningful for me.
Yeah. So tell me, I know you're listening in and the customers you serve, they have their customers, and those customers are experiencing higher and higher rent prices based off of just
Yeah.
the realities of the world. And so, tell me, I heard some news that you're working on some things that can get behind some different thinking around how we can support these pressures on rents.
Yeah. Well, I wish we could take, well, I don't know. I wish we had some ability to control rent prices. My first customer would be myself, and lower my rent cost. But we announced a really cool partnership with One App, and it's a Portland-based company that is built some really cool kind of fintech products to help renters get access to housing. And it's very specifically folks who are in a position where they might not have a co-signer. They don't have somebody that can, or they don't have the income themselves. They have jobs. They're perfectly qualified renters, but they don't have they aren't able to check all the boxes that's required to get into an apartment that they frankly are qualified for. But they're missing some of those pieces in order to access that housing. And there's disparate impact on communities of minorities, communities of color, women. And so our team had asked our DE&I committee to kind of seek out some partnerships in order to give back to the community we're serving. Found Tyrone and the One App team, and built a really cool partnership to help people be able to access housing, and get more people into apartments that they, again, are fantastic renters, they're qualified for, and just kind of missing some of those pieces. And so that's the partnership that you're referring to. And yeah, it's super exciting. I'm happy to share any other details kind of about it if you want.
Yeah, how does it work? So is this the property manager shares it? Do you go direct to the residents? How do they learn about it, I guess?
I'm happy we're here talking about it so more people can learn about it. But imagine a property's dealing with a prospective resident who again is qualified and would be a fantastic candidate to move into the apartment, but they failed to meet some criteria, like they don't have a co-signer, or they're not able to pay like just the upfront, like the security deposit, something like that. And so that's where programs like One App help. They're essentially a fintech product that's for, I guess, like creating a risk, and it's almost like an insurance product, but they're providing an alternative to a co-signer in order to get in, so that there's zero risk to the owner and bringing on this prospective tenant. And there's can be a relatively small fee associated with accessing those financial products. And a lot of these prospective renters, like that is the barrier. Like that's where the friction point is in order to access housing. And so that's what we're raising money in our partnership to support, so that when really great tenants come along who need housing, but just come up just a tiny bit short on that one piece that they need in order to access the housing, they can't, like that's where One App has the program. We're providing some capital to help those folks get into homes. And again, it's predominantly like it's crazy. It's like single women of color. Mm-hmm. And so when you look at like communities that have just, again, disparate impact, like we're really excited to partner with One App, because like it's helping people who really need it, and B, it's helping our customers, which is really exciting to be able to bring like awesome new tenants to these properties who are like perfectly capable of paying rent every month and being fantastic tenants in the properties, long-term tenants of the properties. and we're kind of are able to get in the middle of that, which is great. And I I I was so blown away when I learned about Tyrone's program and the One App program. Just felt like really one of the coolest things I'd ever heard about, supporting our customers and the community as a whole, and helping people get into housing, especially in this macro environment. So we're super proud of the partnership. We're going to raise a ton of money this year, help a ton of people get into houses, homes of their dreams. And I'm really happy you asked about it, because like in order for it to grow, more people need to hear about it. So
How do we get it to grow? Do they reach out to you? Are you mentioned you're raising money, want to continue to support it? What does that look like?
yeah, we have on our website, knockcrm.com. We've got information. So say any listeners can feel free to go to our website, knockcrm.com, and they'll find information there on how to learn more about the program and get involved. And of course, One App, Google One App guarantee, and take you to Tyrone's company's webpage and learn more about the program there as well. But we're going to be doing a ton from a PR and marketing standpoint to kind of help raise awareness. So again, I really do appreciate you asking about it, because we just got to keep getting the word out there about it.
Yeah, no, this has been a refreshing conversation. I'm sure we could go on and on. This has
Sure.
been,
Yeah.
I think, really useful for our audience. I wanted to get your perspective on not only you're building a healthy organization with inside out, and also doing some innovative things with technology, but I love the big picture view of where we're going to as well. So with that, any final thoughts you want to leave our viewers with?
No, just really appreciate getting to know you, and I want to say thank you for. I really enjoyed kind of learning about your path into multifamily, and it's an awesome industry to serve. So just feel very blessed and happy to be here, and look forward to the next chapters. But yeah, thank you very much for having me.
Amazing. All right. With that, we'll just wrap up. We'll see you on the next show then.
Talk to you soon.
All right.
Thanks.